You're supposed to enter once the candle goes green on a buy and red on a sell. Let me outline it clearly. This is your entry price right here, and this is your entry price right here. Buy, sell, BS, like you know what it is. Now we'll wait for this to go up, and we'll just demonstrate a pullback in real life if it actually happens. So again, here's a pullback example. If you can visualize it, the trade came here, right? See, it pulled back all the way up here, and then it fell back down. So whichever guy or girl or whoever waited for this pullback, that was so nice. Look how close it went to your stop loss. It was like such a perfect entry. The stop loss right here, and it almost went there, but it did not quite. And there you go. It just keeps falling. So this was a profitable trade. You entered at 88. Yeah, done. 20 points done. So there you go. This was another 20 points. So this is locked into 20 points. And that's all systematic algorithmic trading really is. Those things where your brain thinks like there's automated strategies that you can put on auto trade, that's not real. You cannot just input a bunch of variables into the computer and get a strategy spit out at you. Those reports are fake. They don't work because it's not taking into account future-looking buys and average prices that change every month. That's why those strategies always fail. You have to manually test each individual day over the course of 10 years to actually verify that it actually works. Just when it closes. So once it closes green, we only wait for the candle to close that color. So right now, once it closes green right here, and you'll know it closed green because it formed a second one, right? And then you just enter on that entry. If it's flashing red and green, that doesn't matter. That just means it's moving. Yeah, you have to wait for the candle to actually form because otherwise you're just gambling on random trades. Like you're just waiting for nothing. Oh yeah, I forgot we had a trade open. This is, yeah, remember our sell? We took this sell, even though it fell down. And there we go, close. That would have been either $4 profit, $10 profit, $20 profit, whatever the order quantity multiplier is. So congratulations if you got that sell. Oh, nice, you got it. Nice, nice. Exactly. So wait for one full candle to form and then allow it to run. Yeah, it's never take advice from anyone, really. As I wouldn't even take my advice. It's just like, I just want to show you how I did it, what I do. So now it's forming green. There, see, like it shot up, right? And now just let it pull back a little so you get a better price. Why would you wait for that? Because you can't enter the trade late. You already missed 2 points. So you got to let it pull back and get in below your entry. Anywhere in this range is nice, or just your entry price. But you don't get in late. So there, one candle formed, right? And now just let it pull back and you'll get on this trade. See, it's up here right now. So let it go back down. If it goes back down. If it doesn't, we miss the trade and we move on to the next one. Statistically, this will happen forever and ever. So don't worry yourself. Oh, and thank you for reminding me to close that. I wish I could. In 2016-17, I used to badmouth everyone because I know everyone's fucking full of shit nonsense. But it's unethical and blah, blah, blah. And the people can decide for themselves. I would rather you guys go and tell everyone that this guy or whatever is like a good thing than me having to tell anyone myself that like this is good. Yeah. So how do you know when to enter when the trade is already started? When it pulls back. See, it pulled back. There, perfect time to enter. There, done. It's already back in price now. We enter that buy. We got in at 7177. Therefore, our stop loss is 10 below. So 77 minus 10 is 67. Let me just like change that color. And there we go. Lost that shitty trade. Same way on the sell. Look, the sell's going to form here, right? You can either get in right here as the best entry because it's the entry price. That's when the strategy was tested to enter. Or you can get in on the pullback when it goes up a little. So you save a little bit. And these little savings end up being a nice 10, 20, 30% bonus. And that's what huge companies make their revenue off. There's a lot of really big private equity companies whose trading system breaks even. And at the end of the year, they bank off the slight savings they got on the future-looking bias spread or commission or whatever happened. Because those things are guaranteed. When you're dealing with big money, you need something that's guaranteed. You can't just walk in like, I have a trading strategy. The little green thing is where it's going to reverse to green, and the little red one is where it's going to reverse to red. There you go. So there, see, it's down here. This is the price, right? Let it pull back a little. Just let it go up a little above the entry. That way you get the perfect sell entry. You saved on this slight 2 pips and entered right around here. Same thing on the buy. The buy formed here, just let it pull back a little and get it on the buy. There, see, right there. So this is future looking bias example. Me, John, and Mike were, yeah, see that speed? So me, John, and Mike are like, oh shit, it's moving. I'm going to quickly go to the platform and take a sell. And I got a better price than Steve. He got a better price than me. And our third friend got the worst price. But now, look, I'm so late. And coincidentally, the best price. It's so high. It went so against all of us. And then us smart guys who got in down here, we're like, ooh, we're losing. So it goes for and against you both ways. So again, to repeat, the best time to make an entry, see the sell formed right here. The sell formed. It pulled back a little. Enter sell. Sell. Stop loss right here. 10 points. So now it's either going to go down or it's going to go to stop loss. Same thing on buy. See, like this was the buy price. Pulled back a little. And now it went up here. And this guy, whoever got in here, is still on this buy. It didn't finish yet. But forever who came in here, like imagine you walked in like at this time, you're on the sell. And now we're on the sell. We got a nice price. Basically, to say it simply, on the red candle, anywhere in the brick zone is a perfect sell. On the green candle, anywhere in the brick zone is a perfect buy. Because you save this much. It's all about savings. You can always stop the trade manually. You don't have to follow through with your targets. You can always close it at any time. The targets and stops are just there for if you're moving some serious money. Yeah. Personally, I don't use them because I understand future-looking bias, that sometimes it's going to go flying and give me extra profit, and sometimes it's going to give me a little bit less. Because that's future-looking bias. Sometimes it'll just link you in the greatest way, and other times you're just going to be like, oh shit, I missed out on like this much. So we're in this buy, right? Guys, we're in this buy. Let me show you again. See, like this is where the buy came. And look, just align it with the grid. See, this is the current price. It's below the entry of the buy. So therefore, we're in this buy now. Stop loss is right here, 10 points, right? Negative 10. And target is up 20 points. 20 points somewhere up here. We'll just let it go. Let's just wait for this to move. So here, this is the buy, right? Line it up with the grid. The current price is below the buy, right? So there you're in this, yeah, you're in this buy. And there you go, stop loss, negative 10. And now it's to go up to our target, plus 20. I literally just drew the same thing again. So now this is either going to go up or it's going to go to stop loss. We're in this buy already, right? See, we're in this buy. That was a perfect buy. See right there, buy, and now it's up here. And that's it, we're done. Trade closed. That's it. That's it, done. So same thing, remember? Right here, we got on this buy. Right, we got on this buy right here. From right here, and it shot up, and we got out right around here. Now it's falling back down. Cause lightning. Woulda, shoulda, coulda, if, but, then. All these statements are myths. They're dreams. They never happen. You need a system that will actually run like a business that can be duplicated by several people. You don't want to be a freak accident that got rich and went on CNN one time. You want to have something quantifiable that you can pass down to other people and duplicate as much as possible.